Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's presentation, Anthony Power and I are joined by Sam Tabar, the CEO of Bit Digital. He's officially on to talk about Q1 earnings, but there's so much more we want to get into during today's discussion. Before we do, take a second, hit the like button guys. Big help to myself and the channel, specifically in getting this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below what you think about today's discussion and if you're currently holding any shares. With that being said, let's get into today's video. Okay guys, so that's right. Today's interview, we've got the CEO of Bit Digital, Sam Tabar, back on the program. This was officially titled a Q1 earnings interview, but there's a lot that's happened since that Q1 press release that we want to get into today, Sam. So thanks so much for making the time. Really looking forward to this one.
Yeah, thanks for having me on, guys.
Should be good. Now, I know Q1 is a few weeks expired at this point, but can we talk about some of the highlights that transpired in that 3-month period? Maybe some of the key numbers or focal points in your opinion, Sam?
Yeah, so total revenue from Q1 results is a little over 25 million. Our HPC revenue was 16.4 million. Our Bitcoin mining revenue it was 7.8 million. Our gross margin is about 49%, which represents a 700 basis points growth from fourth quarter. Our total liquidity is 141.4 million. We have zero debt on our balance sheet. So overall, it was a solid quarter with revenue growth dragged down by the mining business, which was exactly by design and was expected. The HPC business is starting to hit their stride in a very big way, and definitely the best is certainly yet to come. We have about now 25 clients basically evenly split amongst the cloud and the colocation business. So yeah, so no debt, 25 clients, $141 million on the balance sheet. Great growth on the WhiteFiber business, the HPC business in connection to the data centers and so on. So we can get into all that later today.
So the Bitcoin mining, which you said there, obviously now been surpassed by HPC, still probably a valuable part of the business. At the last count, it was 1.8 exahash. In my sort of terms there, that should be delivering close to maybe a Bitcoin a day. And at today's prices, over $105,000, that should be bringing in probably in excess of, $9 million in this current quarter. So that'll exceed what you did in Q4. So, a little bit of optimism to come from that business model.
Yeah, but as you know and others know, we are not Bitcoin maximalists. We believe that we were originally a Bitcoin miner and we continue to be valued as one, which I think is a giant mistake, but that mistake will eventually be corrected. We do think that ETH will replace social and legal contracts as we know today. Bitcoin is the mother coin, and there are a lot of capital market proxies in the markets for a lot of public Bitcoin miners who are acting as capital market proxies for Bitcoin. We think that market is too crowded. I think we are right, and we think that the market is not crowded for other things. And in the meantime, we have this WhiteFiber business that's going extremely well.
Now, we're going to get into the WhiteFiber portion here as the main event, but before we do, you mentioned the Ethereum strategy. I recall a few quarters ago, Sam, you were really positioning the company to be looked at as the micro strategy at that time, strategy now of Ethereum. We've seen a move in the price of Ethereum. It was up over $2,800 US per coin. It's in the 2550 range, I think, right now. Can we get an update on your stance there? Are you continuing to look and acquire Ethereum? Is there any point at which maybe you'd start to sell that Ethereum and use that money or capital towards the WhiteFiber expansion?
No, we have other things in mind. We would not sell the Ethereum to expand the expansion. We have other ways to do that. Stay tuned for that. And with respect to really getting the attention of the capital markets as to why we are a really great MSTR of Ethereum, again, stay tuned for that for potential announcements in the near term future. We are very bullish on the fundamental use cases for Ethereum. And when you can replace a middleman with smart contracts, it makes it a very valuable asset. And so my thesis is just maximizing shareholder value. I've never been a Bitcoin maximalist. I believe very much in Bitcoin, however, in terms of a commodity. Gold markets is about 13 trillion in market cap, and Bitcoin will eat the gold market's lunch. I personally have Bitcoin in my cold storage wallet, and I believe strongly in Bitcoin. But this is not team blue versus team red. Ethereum has technology that Bitcoin doesn't. Bitcoin is a store of value. Ethereum has smart contracts. It can replace lawyers. It can replace bankers. Who doesn't want to do that? So look, we're very bullish on we've been bullish on Ethereum for a long time. There's been a lot of naysayers. Ethereum is now catching up very aggressively and has been outperforming Bitcoin. If that's what you want to measure it against, I don't. But it's been outperforming in most digital assets recently, and people are starting to wake up as to what Ethereum is about. And so I'm really pleased about that, and we think that the ETH bull run is just the beginning. So we're very excited. The market is taking notice, and as of today, we're recognized as having one of the largest stacks of Ethereum by any public company besides Coinbase. And our ETH stack has actually grown above our Bitcoin stack in value. ETH has become just an increasingly attractive commodity as a treasury asset. It offers unique utility beyond just a store of value like Bitcoin. And staking provides a yield component that is appealing for capital efficient treasury management, which is not something you can really do with Bitcoin. And ETH underpins much of the DeFi ecosystem, and holding ETH aligns with exposure to a broader digital asset innovation. So yeah, so listen, Bitcoin, Mothercoin, excellent store of value. It's going to eat the gold markets. Ethereum is going to eat the financial system. They're both different things, and I'm a champion of both. But when it comes to positioning for a capital markets proxy, when it comes to digital assets, we're going all in on Ethereum. Yeah.
Awesome, good to hear. If before we just talk about the latest acquisition, can you just give us a sort of like an overview from the HPC side of the business? I remember we talked, 18 months ago, and you had that one client, that one big client before everybody else who'd been in the HPC space had announced any sort of significant client. And I think at the start that was 35 million, then ramped up to 50 million. Can you tell us sort of like where we are now with number of clients and sort of where you are in terms of your sort of annualized revenues?
Yeah, we have about 25 clients in total now, evenly split between cloud and data centers. Our most recent transaction is that we bought a 1 million square foot data center facility that we retrofit into our flagship AI data center campus. It has immediately available power. That facility has entered into a capacity agreement with the utility over there called Duke Energy for 99 megawatts. 24 megawatts is expected to be delivered on or about September 1st, 2025. We expect to complete this first phase of HPC data center development and be online and operational by the year end, by this year. The utility's preliminary feasibility study supports up to 200 megawatts for this facility over time. And this facility is strategically located in North Carolina's Piedmont Triad, which is a region to many numerous existing hyperscalers. We chose that place very strategically. Its proximity to multiple metro areas supports AI inference workloads. That's very important. If your facility is in the middle of nowhere, it's very difficult to support inference workloads, no matter what others say. We're in active negotiations with multiple potential HPC data center tenants. We've already signed one non-binding LOI with a client. We're speaking to many more who are on the verge of signing LOIs with us there. The location, size, and power profile makes it a super rare asset, which we believe will be foundational to meet accelerating demand from AI customers and pursue long-term value creation for shareholders. We acted decisively to secure what we believe North Carolina will be the cornerstone asset for our company. The 1 million square foot facility that has a power feasibility study of 200 megawatts is not nothing. And of course, they're not valued by that yet, and we will be eventually. And we're looking forward to converting the LOIs that we have into tenancy agreements and to turn the conversations that we're having with very well-funded, well-known counterparties into LOIs that will eventually, hopefully, go into tenancy agreements. That's a process. We have a professional team doing that conversation right now with those counterparties.
In terms of like the 200 megawatts, I mean, just for the listeners to understand that in more context, I mean, I've seen the largest data center. I've been fortunate to visit the largest data center in Europe. I'm UK based, and that was 150 megawatts. That's a metadata center in Sweden.
Right.
So when you're talking 200 megawatts, this is extremely big. In terms of the conversations that you're having, we did hear from Adam Sullivan, the CEO of Core Scientific, recently on a conversation with a HPC specialist, talking about how things were changing in the HPC space, and he seems to think the next deals coming through now will be not like the sort of the deals that have been out there already or quoted out there, more of the sort of like 70 to 100 megawatt deals. Are you hearing that sort of same conversation with potential clients that you're seeing at the moment? You know, having, 200, 300, 400 megawatts isn't necessarily going to bring you the deals. They're looking for more, unique amounts in the proximity where they need to deliver it.
Well, proximity is geographical proximity is extremely important for sure, and that's why we chose that facility in the Piedmont area, close to metropolitan areas. But we're in negotiation right now with 4 to 5 clients simultaneously and negotiating these LOIs. There's substantial interest in this site, and it's from client names that would frankly surprise you and a lot of people who are listening to me right now on this interview. It isn't just the neoclouds or hyperscalers that you normally think of. It's Fortune 500 enterprises as well that we're in talks with. And they're very serious discussions. So look, we have clients interested in contracting capacity with start dates ranging from December 2025 to December 2026, and that works really well for us because it matches up the build cadence that we're planning on. I don't really want to comment on revenue potential given the negotiations for the site that are ongoing right now, but you can figure out what the market rate is for a tier 3 data center capacity in a coveted region, and you could work from there. We're super excited about the project. There's still a lot of work to be done, obviously, but we're going to focus on that and eventually let the results do the talking.
In terms of, I mean, you mentioned tier three there, and we've noticed that a number of miners are using some sort of a hybrid approach to their data centers. Tier three sounds like it's going to be significantly, obviously a better quality finish than some of the other miners are quoting out there. But obviously, alongside that, then goes the cost of delivering that type of quality.
I should mention, just you're talking about tier 3, we actually have a tier 3 data center. Our team has built a tier 3 data center. We acquired that late last year through Enovum. We now have 4 facilities. They're all being, and the first one has already been converted into a tier 3 data center. So that's something that we have done in terms of tier 3 status. I'm curious to know what other folks did that in the sector, but we certainly have. We have had the team that's been doing that their entire careers, and they're taking these other facilities and turning them into tier 3 data centers because they already know how to do that. I just want to emphasize.
Yeah, that's and so proof of concept goes a long way when you're having conversations with these potential new clients around the table.
Yes, definitely. It definitely proof of concepts is a huge factor in getting these LOIs with these very serious counterparties. Otherwise, if you don't have that proof of concept, these counterparties just see you as a crypto miner that's cosplaying in the HPC data center to pump out press releases to excite retail. And so that's what these counterparties have a lot of suspicions on with these traditional Bitcoin miners. We have proof of concept. Most of our revenues come from HPC. The counterparties take us quite seriously, and that's why we have one signed with an extremely well-funded counterparty with the first LOI, and we expect more LOIs to come forward, and we'll convert that into tenancy for our North Carolina site.
Yeah, in terms of funding for for the new site there in North Carolina, the size of the site and the fact in your update, I think you mentioned there's potentially $1 billion required maybe for the total funding. How's the expectation of that going to be delivered from the companies? Is there expectation that maybe the client can help fund some of the refurbishment, like we see in other contracts that are out there at the moment, or is this a case of once you're able to sort of like go firm on naming a potential client that will excite the market, potential funding becomes a lot easier with a well-known client name through the various levers that are available out there to deliver it?
Yeah, I mean, we have different options on the menu with respect to funding. We are speaking with an extremely well-known bank, and there's going to be some news on that with respect to mortgage financing, we hope. Very, very final stages of those negotiations. So mortgage financing is extremely attractive for us. These are like very attractive terms. We've always done an incredible job avoiding toxic debt, and mortgage financing is I'll take that all day, every day with respect to developing tier three data centers.
We've seen a few of the miners go down the convertible note route. Is that something that's of interest to Bit Digital, or you think that's in the latter bracket?
I mean, everything is on the table, but I mean, for us, mortgage financing is the gold standard of cheap capital to invest in assets that appreciate. The whole formula is borrow inexpensively into assets that appreciate, and that's the magic equation, and that's one of the reasons, the main reason why we never took on debt because we never got that equation until I could almost say it's very soon.
And one of the things that we sort of overlook a lot in these conversations when we talk about HPC is the fact that obviously when you're creating these new sites, you need to employ obviously people to to manage and to work in these sites. How
Yeah.
how do you find the skill sets in the locations that you're delivering?
So that's one of the reasons why we acquired Enovum. When we acquired Enovum late last year, people thought we just acquired a tier three facility. That wasn't the more interesting part. The interesting part was the 1 gigawatt of line of sight of identifying the right facilities to develop into tier three data centers and the talent. The talent on this team is probably one of the best in Canada, and the facilities that you build in Canada and the US is obviously translates. And we've been very fortunate to have that team that's been developing tier three data centers their entire lives. This is not like a Bitcoin mining team trying to figure it out. This is a team that's been doing tier three data centers long before it was a hot space. And so we acquired them, and they have the right relevant skill set, this incredible team. And luckily, in the Piedmont area, there's really great talent there. It's close to incredible universities, North Carolina State, Duke, and so on. These are really great universities in the Piedmont area, very deep, high-tech skill set. So we'll be able to hire locally as well, which of course is one of the reasons why we're getting all these tax abatements and so on. We believe we're really well blessed with the team that we have. that we acquired, and we're very lucky as well to have chosen facilities that's very close to a deep pool of folks who we can hire to help develop. But it can't happen without the know-how of the NFM team, which we acquired 100%.
Awesome news. One more question before I let Bryce jump in. He's probably on a nice break at the moment. In terms of the energy that Duke are providing, this 99 megawatts, what would be required to increase that to 200 megawatts? Is there going to have to be more power conduits purchased and ordered to fulfill that, or is it a case of if you're growing quickly enough, the power can be accessed far quicker than we'd expect normally in these big sites?
It's a little tough to say. So we think it's possible to get to 200 megawatts, the full potential capacity within a few years, but it ultimately depends on getting the power from the utility and our ability to finance a massive project. Right now it's 99, but there is a power study to get to 200. At this point, we're basically planning to build as fast as we can finance it, and we expect the power will be in place by then. This is a very big project. Our Innovin team prides themselves on being able to develop sites quicker than the market average. We want the results to speak for themselves at the end of the day. Very wary to say statements that are aspirational. So I'm looking forward to just letting the results speak for themselves. But we will provide more discrete timelines as we progress through the project. At the moment, we're focused on the first 24 megawatts that's to get firmly contracted and online.
Hey, now shifting gears a little bit, we made reference to the Montreal data centers, the fact that you guys already have tier 3 experience. Can we get an update there, Sam? Also with the Cerebras Systems partnership or contract, and if that's still planned to go live in July here?
Yeah, so as you know, Montreal 1 is fully online and leased to a diverse mix of colocation customers, so that's all great. Montreal 2 is an amazing site that we are now developing into a tier 3 standards with an initial gross load of 5 megawatts. This is a build to suit with direct to chip liquid cooling technology to support Blackwell chips. Our plan is to have a total of 32 megawatts online by the end of this year, and then more than double that in 2026. Montreal 3 is under development and will support the 5 megawatts co-location agreement with Cerebras Systems with future expansion potential subject to utility approvals. We're expecting Montreal 2 to be online by the third quarter, which is a little bit later than expected, in part due to the timing of the mortgage financing, which is nearly finalized. Montreal 3 is also expected to be online in the coming months. The direct-to-chip liquid cooling structure is being placed as we speak. I think the WhiteFiber X account, Twitter account, may have posted some pictures of the progress of that today. But look, we're really excited to start on that contract with Cerebras. We're really impressed by their business, and we think that they will be a really significant growth story in the coming years. So yeah, we're just looking forward to working with them, and we're looking forward to executing at a very high level. We want to be their partner to help enable their growth, and we want our performance and reliability to make us a no-brainer choice for their future growth needs.
Now, you mentioned part of the reason getting into the data center HPC AI space, obviously access to capital or cost of capital. The other big element we've heard from a lot of CEOs, including yourself, Sam, over the last 18 months, is the eligibility for a stock re-rating. So getting into that higher multiple bracket, we see data centers trade 20, 25, 30 times PE, whereas the miners were kind of restricted in the 1, 2, 3 times multiple range. Yeah, been a frustration for you throughout the year. You've talked about potential spinouts. The question now is, with revenue already coming through the door, you've got dozens of clients. We've seen multiple contracts signed in the industry. As you say, Bitcoin revenues are now the minority in terms of your overall revenues with the business. When do we start to see this re-rate take place, not only for Bit Digital, but just as a general question in the industry?
I'm not confident that the capital markets is going to re-rate Bitcoin miners as HPC data center colocation multiple. I don't think those multiples are going to come that overnight to Bitcoin miners. I think the capital markets have stuck Bitcoin miners in a category, and that Bitcoin miners are going to have to do some structural changes, serious structural changes, in order to really ring fence and to prove to show the markets and to clients that you're not a Bitcoin miner cosplaying in the HPC data center space, that you're real, that you're serious. And to do that, you need to show that you've built tier three facilities. You need to have a team that's actually done this before. You need to have clients. You need to have the facilities. Proof of concept is extremely important. And you probably have to do some corporate structuring in order to get those multiples. I can't speak more to that, but that's my opinion. I do not think, and I, with total respect, disagree with other CEOs that there's going to be some sort of overnight re-rating of Bitcoin miners without all the ingredients I just talked about, including some corporate. There needs to be some much more serious things that's done by the company than just hope that a re-rating will happen if they talk about HPC a lot on their Twitter account or what have you. It has to be something more fundamental structurally
Like
and
delivery, well, delivery of numbers. I mean, end of the day,
delivery, but I think even more than that. But
you look at the miners out there that have got these contracts, but they're not. I think Core just starts to get revenues in May, so maybe when they get their next earnings updates and the market starts to see revenues shooting up in terms of HPC, maybe they start the re-rating process, and because they can physically now see it. I mean, I hear what you're saying, and the argument will be is, a lot of these companies have been doing data centers, albeit data centers for Bitcoin mining, and now they're doing data centers for high performance compute. But you guys are the ones that have effectively, you've delivered the revenues, and you're proving that the market's not even accepting that as in good faith, effectively.
correct. That's why I'm not confident. In fact, I don't even believe that a re-rating could happen unless you're doing something much more significant. So anyway, stay tuned.
Yeah, very interesting discussion today, Sam. Obviously, a lot of pieces under the surface here going on at Bit Digital. We want to commend you guys on the Q1 performance. We appreciate the time today. Look forward to having you back soon. You guys, if there's any additional questions we haven't got to today, feel free to leave them in the comment section below. Hit the like button. Feel free to subscribe. Sam, we'll see you back here soon.